Big news out of Silicon Valley. Nvidia's CEO, Jensen Huang, just sold a jaw-dropping $30 billion worth of company shares. Is this a move to watch closely for tech investors or just a strategic portfolio decision? Let's break it down and explore the ripple effect this could have on Nvidia, the tech industry, and your investments. In today's video, I'm diving into one of the most buzzworthy stories shaking up the tech world. Jensen Huang, CEO of Nvidia, cashing out $30 billion worth of shares. If you're invested in tech or considering it, this is the kind of move that raises eyebrows. But what does it mean for the company, for investors like you, and the broader market? Stay with me as we take a deep look at how a sale of this magnitude could affect the future of Nvidia and the entire tech industry. Before we dive into the details, if you're interested in understanding how major stock moves like this impact your investments and want more insights into tech stock strategies, make sure to hit that subscribe button and click the notification bell. By staying informed, you'll be ready to make smarter investment decisions in the fast-paced tech industry. Don't miss out. Let's grow together. What does it mean when a CEO sells shares? This isn't just any routine stock sale. It's a monumental event, and it's rare for a CEO to offload such a significant stake at once. Tech enthusiasts, investors, and analysts alike are now wondering whether this signals a larger shift within Nvidia or simply reflects personal financial decisions. When a company leader like Jensen Huang sells a large stake, it usually makes waves. Here's why. Impact on investor confidence. First, let's talk about why CEO stock sales matter. When the leader of a company sells a huge chunk of their shares, investors naturally wonder if there's a reason behind it that they don't know about. Is there a looming challenge the CEO foresees? Or does this signal a lack of confidence in the company's long-term growth? Such concerns often lead to short-term stock fluctuations as investors try to interpret the underlying reasons. Investors typically interpret such actions in a few different ways. They might view it as a lack of confidence in the company's growth or as a simple diversification strategy. Either way, this sale has raised concerns about what's ahead for Nvidia. It's important to note that Jensen Huang is closely tied to the identity and success of Nvidia. His vision has shaped the company's breakthroughs in AI, gaming, and cloud computing. This sale doesn't just impact stock prices, it brings into question the CEO's belief in Nvidia's future growth trajectory, diversifying or signaling a shift in strategy. On the flip side, selling shares isn't always a bad thing. Executives like Jensen Huang have a lot of wealth tied to their company's stock price. Selling shares is sometimes just a way to diversify their portfolio or cash in on gains when the market is favorable. So we have to ask, is this a routine financial move or is it a signal of strategic change within Nvidia? In the case of Nvidia, we need to ask whether this is a routine financial move or whether it signals a larger shift in strategy. Is Huang merely reducing his exposure to Nvidia's stock, or could this sale be a part of a broader plan to pivot Nvidia's business strategy in response to market conditions or competitive pressures? The tech sector's growth and challenges, the backdrop to this sale is critical. Nvidia has been a leader in some of the most cutting-edge industries, from AI to gaming and cloud computing. But there are headwinds: AI boom and competition. Nvidia has been at the forefront of the AI revolution, with its chips powering everything from data centers to autonomous vehicles. But the tech industry is a battlefield. Companies like AMD and Intel are competing aggressively, and innovation in AI is a constant arms race. Could Huang be cashing in while Nvidia's stock is near its peak? Or is there a sense that the competition could start to close the gap? Nvidia's dominance in AI, particularly with its GPUs powering everything from data centers to autonomous vehicles, has been a major driver of its stock price. But competition from rivals like AMD and Intel is heating up. especially in the AI hardware space. Huang's sale might indicate he sees growing competition as a potential threat to Nvidia's market share, global chip shortage, and supply chain pressures. Another critical factor is the ongoing global chip shortage. Nvidia, like every major tech company, has faced challenges securing enough chips to meet the demands of the AI and gaming markets. This shortage has impacted Nvidia's ability to fully capitalize on demand as production delays affect delivery timelines. Investors might wonder whether the chip shortage, along with other supply chain disruptions, played a role in Huang's decision to sell a large portion of his stake. Why now? Timing of the sale. Understanding the timing of Huang's sale is just as important as the size of the sale. Strong market performance in 2023. Nvidia's stock surged over 200% in 2023, driven by the excitement surrounding AI advancements, gaming, and cloud computing. The company reached unprecedented highs, but could this also mean that now is the time for top executives to cash out at the peak of the market? Timing a sale at a market high could be part of a smart strategic play for Huang. This kind of meteoric rise often leads executives to sell shares, capitalizing on the high stock prices. Could it be that Huang sees now as the optimal time to cash out, knowing that the market may have reached a peak for Nvidia? Timing. The market is always tricky, but selling at a peak is a strategic move if you believe a correction is coming. Upcoming changes in tech regulation. There's another angle to consider: possible shifts in tech regulations, with governments across the world considering tighter regulations on big tech. Could Huang be preparing for a less favorable business environment in the near future? How will this affect Nvidia's stock? There's no doubt that a sale of this magnitude can affect stock prices in both the short and long term. Short-term volatility. We might see short-term volatility as traders react to this news. When a major executive like Huang sells a large portion of stock, it can create uncertainty in the market, driving prices down temporarily. Long-term investors, though, will want to keep an eye on Nvidia's earnings reports and strategic updates to understand whether this sale has deeper implications. Long-term stock health. While short-term fluctuations are likely, Nvidia's long-term prospects are still solid, especially with AI, autonomous vehicles, and gaming continuing to grow. However, the sale could impact market sentiment, and we may see institutional investors reassess their positions. Historically, large sales by company insiders often result in a temporary dip in stock prices. This could present opportunities for long-term investors who believe in Nvidia's prospects and see the dip as a buying opportunity. What can investors learn from this? If you're invested in Nvidia or considering entering the tech sector, Huang's stock sale presents some important lessons. Stay informed, but don't panic. First, don't panic over one executive's move. CEO stock sales happen all the time, and while they're worth watching, they don't always signal a major issue. Instead, use this as an opportunity to reassess your portfolio, stay informed about the tech industry, and watch for any further developments from Nvidia. Diversify your portfolio. Another lesson here is the importance of diversification. Even though Nvidia has been a strong performer, it's crucial to spread your investments across different sectors to protect yourself from any single company's stock fluctuations. If you're curious about Nvidia's future or tech investing in general, make sure to hit that subscribe button. Now, I'll be posting more updates on tech stocks, market trends, and how you can protect your investments while maximizing returns. Share your thoughts in the comments. Do you think this sale is a red flag or just a smart financial move? To recap, Nvidia CEO Jensen Huang's sale of $30 billion in shares has caught the attention of investors and the tech industry alike. Whether this is a smart portfolio move or a sign of shifting tides for Nvidia, it's definitely something to watch closely. Keep an eye on Nvidia's performance in the coming months, and remember, informed investing is always the best path to success. If you found this video helpful, don't forget to hit the subscribe button and tap the notification bell for more insights on tech stocks and market trends. Let me know in the comments below, what's your take on Huang's stock sale? Do you think this signals trouble for Nvidia, or is it just a savvy financial move